Now, it's actually been a year since we started doing these webinars, and I was having a look back through the all of the market updates, because it's been a whole year now since I started delivering these market updates. And quite frankly, I think I must sound like a bit of a broken record now, as the market just hasn't slowed down since the start of the pandemic. And here we go again. As you can see from my headline, prices have hit a record high as properties sell at fastest pace ever. So let's delve into this one. Now, back in March, I reported an incredibly positive start to 2021 with increases in annual price growth, the volume of sales agreed in the marketplace, the amount of property changing hands, an increase in mortgage approvals, and an overall heightened buyer demand and activity. Well, now I'm going to show you what has happened since then. So take a look at this graphic I've pulled from Rightmove. The national average price of property coming to the market hits a new all-time high of £327,797, following a 2.1% monthly jump in April. Now, this is huge for a month period, and it's significant because it's in fact only the second time in the last 5 years that has seen prices increase by more than 2% in a month. So it's a big jump, especially considering that lockdown restrictions are still limiting the country's movements and activities. On a more local level, the West Midlands has seen the average house price climb to £249,200, which represents a monthly change of 2.8%, so even bigger than the average, and an annual growth of around 6.5%. And more specifically, our area of Wolverhampton has seen annual growth of approximately 7%, which would represent almost £15,000 added to the average home in the last 12 months. You may have also seen from the graphic that the annual price growth recorded last month is around 5% on average across the UK. And on the bottom table, which broke down the market into 3 key sectors, you will have seen the biggest growth is on second-time buy type of transactions and the top of the ladder, or the higher end of the market. No doubt, as we've said many times before in previous updates, this will be fueled by factors such as the extended stamp duty holiday, which remains on purchases up to £500,000 until the end of June, and then up to £250,000 for a further 3-month period until the end of September. And of course, mortgage rates remaining low, and higher loan-to-value products being made available again in the new year, including the government-backed 5% deposit mortgages as announced in the last budget. They've definitely made a difference too. And the need for more space by many has been highlighted by the pandemic. So most specifically, the outside space and home office space is definitely in demand by potential home seekers. So again, huge factor fueling the uplift in demand. So how big is the demand? Now, in the first week of April, Zoopla recorded an increase of 118% in buyer demand in comparison to the same period in a more normal pre-pandemic market back in 2019. This has led to what can only be described as one of the busiest markets in years, with the number of sales agreed nationally up by 55% on the same period 2 years ago, with the total value of homes sold subject to contract so far this year almost double that of previous. And by value, I mean combined total of purchase prices. So it's absolutely huge, and a really busy start to the year for a lot of agents and buyers and sellers and solicitors and surveyors and mortgage lenders and all sorts of companies. So the process is taking a bit longer than everyone would like, but the activity is there for everyone to see. The cities with the highest levels of demand in Q1 were Birmingham, Swansea, Glasgow, Liverpool and Leicester, which all had something in common. Their average house prices are all under £200,000. And I would suggest that surrounding areas, those cities, are definitely feeling the benefit too. I know we certainly are here in Wolverhampton, down the road from Birmingham. Something else to highlight is the absolute buying frenzy for new stock, which has seen the average number of days to sell a property reach its lowest ever level, and the number of houses selling within a week reaching its highest ever level. At the peak of this activity is the more mass market of 2 and 3 bedroom semi-detached properties, which are being snapped up the quickest, with 30% of those being marked as sold by agents having been on the market for less than a week. And I know a lot of bidding wars are happening, and it's all gone a little bit crazy out there, and that's pretty much the tale across the country. But of course, these high sales volumes are eroding the supply of homes for sale, with stock levels down nearly 30% in April this year compared to the same period in 2019 before the pandemic. So in short, the number of homes being listed for sale has not kept pace with the buyer demand for most of the last 12 months. And this demand and supply imbalance is increasingly focused on family homes, which stacks up with other market data I've shared a couple of minutes ago. Worth pointing out, however, that the proportion of flats for sale has risen, as they make up nearly 40% of what is currently available in the market. A trend which chimes with second-time buyers looking to move to a house amid their ongoing search for space, particularly outside space. So it does pose the question, is there a bit of an opportunity to do a few great deals on flats at the moment, where there's a bit more of a saturated level of flats in the marketplace, and might be a few buy-to-let opportunities, certainly worth thinking about. And finally, just to wrap up this section, a couple of other statistics from Rightmove that grabbed my attention. May find them of interest, you may not, I don't know. First one, check this out. So March saw time spent on Rightmove surpass 2 billion minutes in 1 month for the first time ever. Now, I don't know how many zeros that is, but I did do a quick Google conversion, and it turns out it's 33 1/3 million hours combined between people searching on Rightmove in March. Absolutely crazy. And the 7th of April, a new daily record of 9.3 million visits to their site was set. So I think it just goes to show that lockdown has really left the nation with too much time on their hands. So that rounds up the sales statistics. And before I move on to the rental market focus, I'm just keen to hear general views and opinions from you guys too. So please feel free to share it in the chat. Anyone who's active in the market, what you're experiencing, what do you think the future holds, what do you think the rest of the year holds, or maybe going into next year. Feel free to challenge anything I've said. But yeah, just anything that you might want to add to the table, please feel free to pop it in the chat. Personally, for me, I think the supply level will pick up a bit over the summer months, as there'll be more homeowners who are holding off over recent times, becoming increasingly more comfortable with opening their homes to viewings. I'm talking about these people that actually decided against putting their property on the market because of the pandemic and didn't want to have too many visitors, that sort of thing. I think the scale of buyer demand will gradually cool off as people are able to return to some level of normality in life again. And again, of course, things like the stamp duty holiday coming to an end will no doubt have a bit of an effect on the demand too. But I would, however, expect activity to remain pretty robust for the remainder of the year, with plenty of first-time buyers taking advantage of low deposit mortgages and low rates. And of course, the need for people wanting more space is certainly not going to go away anytime soon. So, and I think just to end that, the scale of price growth is likely to slow. Obviously, it's been going at a very quick rate, especially in the spring market. But I would suggest it would remain strongest in more affordable regions like the North and the Midlands.